Good morning, everyone. Today, I'd like to talk about a significant and somewhat controversial trend in the world of finance and business, ESG, which stands for Environmental, Social, and Governance. These three letters have become quite influential in recent years, affecting how companies operate and how investors decide where to put their money. First, let's understand what ESG is. It's a set of criteria used to evaluate a company's impact on the environment, its relationships with employees and communities, and its governance practices. Many funds have been created to invest specifically in companies that score well on these criteria, hoping to promote sustainable and ethical business practices. However, not everyone sees ESG in a positive light. In the United States, particularly among Republican lawmakers, there has been significant criticism. This political pushback has led some companies to tone down their language around ESG commitments, a practice now known as greenwashing. To give you an idea of the scale, ESG funds have seen outflows of $14 billion this year. This trend is due to various factors. For one, the performance of many ESG funds has lagged behind the broader market. This was particularly evident in 2022 and 2023, when rising oil prices, driven by conflict in Ukraine, negatively impacted these funds. Moreover, ESG has faced criticism for being vague and inconsistent. For example, some defense companies were initially excluded from ESG funds but were later included due to support for Ukraine, which has led to accusation of hypocrisy. This inconsistency has opened ESG to criticism from both political right and left. Despite these challenges, ESG is not going away, particularly in Europe and the UK. Investor interest in sustainability remains strong. Better regulations are helping to reduce greenwashing, and fund managers are becoming more adept at creating genuinely sustainable funds. Interestingly, green investments are becoming increasingly profitable. This is partly due to well-crafted policies like President Joe Biden's Inflation Reduction Act in the US, which has stimulated green investment. This highlights the crucial role of policy in driving sustainable finance. In conclusion, while ESG faces significant challenges and criticisms, especially in the US, its underlying principles are becoming more entrenched. The future of ESG will likely depend heavily on policy decisions and political outcomes, particularly in the US. But the drive for sustainability in business and finance is not a trend that will disappear easily. Thank you for listening.